Imagine having a $100,000 stock portfolio that works for you 24/7, growing your wealth while you sleep. Sounds impossible? It's not. It's like having a money-making machine that never turns off, constantly generating passive income and securing your financial future. Whether you're starting with $100 or $10,000, this video will show you the exact steps to build a six-figure portfolio from scratch. We're talking about taking control of your finances, building a solid foundation for your future, and achieving true financial freedom. Stay until the end, because I'll share a secret tip that can fast-track your journey to that $100,000 goal. Look, let's be real for a second. Investing in stocks might seem intimidating at first, but it's one of the most effective ways to build wealth over time. You work hard for your money, right? Day in and day out, you put in the hours, the effort, and the dedication to earn your paycheck. But what if I told you there's a way to make your money work even harder for you? Imagine your money growing while you sleep, while you're on vacation, or even while you're spending time with your family. That's where the stock market comes in. It's a dynamic and ever-evolving platform where companies raise capital, and investors like you can buy shares to become part owners of these companies. Over the past century, the stock market has averaged annual returns of around 7%. That's more than any savings account or bond can offer. This means that historically investing in stocks has been a reliable way to grow your wealth. Think about it. You put your money in a savings account, and it might earn you a measly 0.05% interest. That's barely enough to keep up with inflation, let alone grow your wealth. That's like getting a pat on the back instead of a real reward. Your hard-earned money deserves better than that. By investing in the stock market, you're not just saving money, you're putting it to work, building a machine that generates wealth over time. You're taking advantage of compound interest, where your earnings generate even more earnings. It's like planting a seed that grows into a money tree, providing you with financial shade for years to come. So why not start today? The sooner you begin, the more time your money has to grow. Alright, before you even think about buying your first stock, we need to talk goals. Setting a clear goal is the foundation of any successful investment strategy. What are you aiming for with your investments? Are you looking to build a retirement fund, save for a down payment on a house, or perhaps create a college fund for your children? Is it that $100,000 milestone, or do you have even bigger dreams? Maybe you want to achieve financial independence and retire early. The first step is setting a clear, specific, and achievable goal. This means defining exactly what you want to achieve and by when. Write it down, put it on your fridge, make it your phone's wallpaper, whatever it takes to keep you motivated. Seeing your goal regularly will keep you focused and driven. For example, if you want to hit that $100,000 goal in 10 years, you'd need to invest roughly $600 a month with an average annual return of 7%. This gives you a clear target to aim for. But hey, I know you're ambitious. You might have even bigger goals in mind, and that's fantastic. If you can invest more, you'll get there faster. Increasing your monthly investment or finding ways to boost your returns can accelerate your progress. It's all about pushing yourself and making those financial dreams a reality. Remember, the clearer your goal, the easier it will be to create a plan to achieve it. So take the time to think about what you truly want and set that goal today. Now let's talk about diversification. It's a crucial strategy for any investor looking to minimize risk and maximize returns. You know the saying, don't put all your eggs in one basket? This age-old wisdom is particularly relevant when it comes to investing. Well, the same goes for your investments. By spreading your money across different assets, you reduce the risk of losing everything if one investment fails. A diversified portfolio spreads your risk and increases stability. This means that even if one investment underperforms, others can help balance it out. Think of it like this. Instead of putting all your money into one single stock and hoping for the best, which can be very risky, you're spreading it across different stocks, sectors, and even asset classes. This way, you're not overly dependent on the performance of any single investment, ETFs, and even index funds. These investment vehicles allow you to own a broad range of assets without having to buy each one individually. It's like having a team of all-star players working together to win the financial game. Each player, or investment, has a role to play in your overall strategy. For beginners, index funds like the S&P 500 are a great starting point. They offer a simple way to diversify your portfolio. They offer exposure to 500 of the largest companies in the US, providing a solid foundation for your investments. It's like investing in the entire stock market with just one purchase. This approach not only simplifies the investment process, but also helps in achieving long-term financial goals. Listen, I'm all about maximizing profits, but the last thing you want is for those profits to get eaten up by fees. When starting from scratch, low-cost investments are your best friend. High fees can seriously eat into your returns over time, so look for options with low expense ratios. It's like avoiding those sneaky ATM fees that drain your bank account. Platforms like Vanguard, Schwab, and Fidelity are great places to find low-cost index funds and ETFs. And speaking of ETFs, options like VIO or SPY are perfect for beginners who want to track the market without breaking the bank. Remember, every dollar saved on fees is a dollar earned towards your $100,000 goal. Chapter 5. Step 4. Automate your investments. Consistency is key when it comes to building wealth. But let's be honest, life gets busy, and it's easy to forget about making those regular investments. That's where automation comes in. Set up recurring contributions to your portfolio so you're investing every month without even thinking about it. It's like setting your finances on autopilot so you can focus on other things. This strategy, called dollar cost averaging, also helps you buy more shares when prices are low and fewer when they're high. It's a win-win situation. Chapter 6. Step 5. Reinvest your dividends. Alright, let's talk about dividends, those beautiful payments that companies send you just for owning their stock. Dividends are a powerful tool for compounding your wealth. Think of it like this: you buy a stock, and it's like owning a piece of that company. When the company does well, they share their profits with you through dividends. Now here's the key: instead of cashing out those dividends, reinvest them. Over time, those reinvested dividends will buy you even more shares, which means even more dividends. It's a beautiful cycle of passive income. Chapter 7. Bonus tip: avoid emotional decisions. Alright, here's the secret sauce, the insider tip that can make all the difference. Avoid emotional decisions. The stock market is like a roller coaster. It has its ups and downs. But here's the thing: successful investors don't panic and sell everything when the market dips. They stay calm, stick to their strategy, and ride out the storm. Remember, time in the market beats timing the market, so take a deep breath, ignore the noise, and trust in the process. There you have it, the exact steps to build a $100,000 stock portfolio from scratch. It's not about luck or timing, it's about consistent effort and smart decisions. Remember, building wealth takes time and dedication, but the rewards are well worth it. Start small, stay consistent, and watch your wealth grow. Which step are you excited to try first? Let me know in the comments. And don't forget to like, subscribe, and share this video to help others build their portfolios. See you in the next one.